Hello, hello, welcome. Hello, my name is Erica Belay. Um, Thank you so much if you are joining me live. It is April 21st, 2022. So if you're joining me live, thank you. If you are catching the recording later, either way, thanks so much. I am a mortgage loan officer, and I work for a company called Best Life Mortgage, and we are a brokerage. And I am doing these live streams just about once a week. And today I'm going to be talking about um, home loan options for the self-employed borrower. But before I get into that, I just want to talk a little bit about myself. I live in Kyle, Texas. I was born and raised in New Braunfels, but I can do loans anywhere in the great state of Texas. Most of my business is between San Antonio and Austin along the I-35 corridor. But as a broker, we work for our clients, not for the lenders. So I have access to probably about 20 different lenders. And so when a client comes to me, I can take all the information from my client and I can shop around for my client to try to find the best rates, the best programs, the best product to meet my client's needs. Now, we are in a rising interest rate environment right now. So, rates dropped a little bit yesterday, they went back up today. I heard buzz that rates by the end of the year might get to 7-8%. I don't know. I'm not an expert on that. And anything could happen to cause rates to come back down. But we are in a rising interest rate environment. But rates aren't everything when it comes to getting a home loan, right? I mean, rates are very important. I do try to talk to my clients about, let's try to find a monthly payment that you feel comfortable with. Let's not get too caught up in the rising rates because it does kind of scare everybody a little bit and it frustrates everybody to see that. But anyway, so today's not about rates. Today is about self-employed and different programs for self-employed borrowers. And so without further ado, let's jump into my presentation. Let me change my screen a little bit here. Okay, so there are numerous self-employed home buyers and homeowners out there. So let's just talk about a scenario. You're a local business owner, you're self-employed, you have a great accountant who helps you write off a large portion of your income to account for your business expenses. And so it's saving you money from having to pay a huge tax bill. The problem with that is that according to FHA and conventional loan guidelines, unlike a borrower who's a W 2 employee, with W 2 employees, we get to use their gross income. But with self employed borrowers, we have to use the net income, not the gross income. So when you write off a whole bunch of stuff on your taxes, it makes your qualifying income a lot lower. So instead of using like 150,000 a year income that you might make, we can only account for 45,000 because that's what your taxes show. Just to give you an example. So you might have a bank account full of assets, you might have solid credit, you might have solid income, but because of conventional lending guidelines, when I say conventional, I mean conventional FHA, VA, because of these conventional lending guidelines, we can't approve you for your desired home loan amount because your income taxes don't show the income that you're really making. So what do we do? Option number one is we could just leave you out to dry for 2 years and we could tell you, okay, for the next 2 years, you can't write off so much in taxes. You got to write off less. You got to pay more in taxes, but you got to show more income on your tax returns. And we have to have 2 years of tax returns because for self-employed, it has to be averaged for 2 years. So that's option number one. Option number two, we approve you for less than your desired loan amount. Well, in this market right now, with rates rising, with home prices rising, chances are you're not going to be able to get approved for an amount to buy the house that you really want to buy. Or you're not going to be able to find a house in the price range that we approve you for because of your write-offs. And then option number 3 is to utilize a stable and reliable loan program and get you approved for your desired loan amount. And so these stable and reliable loan programs are not going to be your conventional loan programs. So the right option really depends on the borrower and what you feel comfortable with, what your timeline is for purchasing that home. But what are your goals? What are your needs? So for those of you who want option 3, the answer is not a traditional lender like a conventional loan or an FHA loan. So what are your options? I've got a few of them for you. So the answer is what we call a non-qualified mortgage or non-QM. So qualified mortgages, conventional loans, FHA loans, those loans are considered less risky. Those are the ones that they follow like FHA, Fannie Mae, Freddie Mac guidelines because they're sold on the secondary market to Fannie and Freddie. Okay. So these non-qualified mortgage programs or non-QM programs are not traditional lender financing. So they have a different set of rules than conventional loans. So you may or may not have heard of these programs, but essentially, the lenders can kind of come up with their own guidelines for these rules or for these loans that are separate and different from conventional loans. Now, having these different home loan requirements expands our ability as loan officers to approve more individuals for lender financing. So for those that don't earn income from traditional sources, such as being W-2 employee, this can be a vital option for buying a home sooner rather than later, or getting you approved for the price point that you want to be purchasing in. So what are these different options? There are quite a few different options, and each of these programs has different needs for the various different kinds of borrowers. But the first example I'm going to talk about is the bank statement loan. You may have heard of this, you may not. So a bank statement loan is basically a program that allows, and it's only for self-employed borrowers, but it allows you to qualify based on the income that is deposited in your bank statements. So we can take 12 months of bank statements or 24 months of bank statements, depending on which way is going to work better for you. And really what the lender does is they just look at all the money that's deposited into your bank account and they consider that as your income. Now there is an expense factor. So if you're self-employed, they're not going to say, oh, well, we can use 100% of that, because there will have to be an expense factor letter from an accountant or a certified tax professional who can provide a statement that says your expenses are 10%, 15%, 20%, 30%, whatever your expenses are. And so, for instance, if we do a bank statement program, we evaluate your bank statements for the 12 months or 24 months. We say, okay, there is $100,000 worth of deposits, just to make the math easy. And you have an expense factor of 10%. That means that we can use 90% of that income, or $90,000 as your income. So if the expense factor letter says that your expenses are 20%, then we could use 80,000. Now that might be better than what you're seeing on your tax returns when you do all of your write-offs. So that's where this program is really great for self-employed borrowers. Very similar program to the bank statement program is if you are a 1099 contract worker. So for my realtor partners out there, anybody who receives a 1099, we also have a 1099 program where it doesn't look at your bank statements. It just looks at your 1099s. And then we also use the expense factor letter, 10%, 20%, 30%. It's going to default to 50% unless we get an expense factor letter. So that's one of the first programs, bank statement and or 1099 program, to qualify our borrowers. The second program I'm going to talk about is a light doc program. It's another alternative for self-employed where you can use 12 months of borrower prepared P&L, profit and loss statement, to qualify for the loan instead of traditional W-2s, pay stubs. Now, the third loan program I'm going to talk about is the no ratio loan. Y'all, this one is crazy. And this one doesn't just have to be for self employed. So this can be really anybody, self employed, W 2 employee, however it is that you're paid. The no ratio program allows a borrower to qualify solely off of your credit score and your down payment. No income, no employment needs to be verified at all. So there's no debt to income ratio, nothing like that. It's just called a no ratio program. Now, with a no ratio program, you're not going to get these for a small down payment. Anytime you have one of these alternative programs, it's going to require a much bigger down payment, and probably some showing of reserves to show that you can pay back the loan. Now, the next program that is a possibility, and this one is also not necessarily just for self-employed, it could be for W-2, really any borrower, is asset utilization programs. So if you have a bunch of assets, whether that be investments or just cash in the bank, not cash in a box under your bed, we can do an asset utilization where we use your assets as income, and we divide your assets over the life of the loan to see if you can pay. You are a qualified borrower to pay for the loan. And then the last one I want to share is really more for our foreign national loan program. So this is a loan program for borrowers that want to purchase a secondary home or an investment property as an individual who is not a U.S. citizen or you don't have an ITIN. So all of these loan programs are non-QM loans. So like I said before, they're going to have a different set of requirements. And most of the time, these requirements are going to be a much bigger down payment than you could use with, like, for instance, an FHA, you can put 3.5% down. VA, you don't have to put any money down. Conventional, you could go as low as 3 to 5% down. You're not going to see that with these non-QM loans. They are designed for borrowers who do have assets, who do have funds available for down payment and closing costs. But other than that, the other requirements of these really depend on the lender. And so I personally, as a broker with Best Life Mortgage, I have, I think 5, 6, maybe 7 different lenders. I have quite a few different lenders that do bank statement programs. And so each one of them has similar guidelines, but each one of those lenders, the bank statement program guidelines are different depending on the lender. So that's different. Like with the conventional loan guidelines are the same for every lender that uses a conventional loan. But for these, it could be different depending on the lender. So with all of these, you're going to have identification. Like I said, you're going to have a bigger down payment. You're going to have some reserves to show that you can pay that mortgage payment for a couple months. Some of them, one of the big things that they require is being able to show that you have either paid a mortgage or rent on time for 12 months. So if you've been living rent-free for 12 months, staying with a family or friend, or if you've been jumping around from place to place, if you cannot show that you've been making on-time rent or mortgage payments for 12 months, it might be tougher to qualify you for something like a bank statement loan. And that's just one of the few kind of different types of requirements for these. Let me see. So for these possibilities, verifying your income or your ability to pay back the mortgage doesn't encompass everything in the qualifying process. So there's a lot there. Like I said, there's a few different little requirements for these. Sometimes it might feel like you're jumping through a few more hoops for these non-QM programs than it is for a conventional loan. So I always like to warn my borrowers of that. It's not always easy, but what is the goal? The benefit is the end result. The benefit is that we can get you into a home at the price point that you want. And so, like, versus having to wait a couple years, like we said, to not show so much write-offs on your tax returns, to show more income on your tax returns. So it could be worth it, depending on your situation, to go through some of these extra steps to get you into these programs. And I don't mean to scare you, because it's really not that difficult. But in comparison to conventional, it might be a little bit, there might be a little bit more stringent guidelines. Okay, when should you use a non-traditional lending versus conventional? Well, I think that we should always check conventional first. In general, your interest rates on a conventional FHA, VA, USDA, these loans, conventional loans are going to have better interest rates. The non-QM products, the interest rates could be anywhere from 1 to 3% higher than a conventional loan. So that might make you think, oh no. But if it's the difference of you only being qualified for a $150,000 loan compared to a $400,000 loan, and you need that $400,000 loan to buy the house that you want, then it might be worth it. And so it's not going to be for everybody. In general, the lenders who do non-QM loans, they're taking on a higher risk, because these loans are not automatically easily sold on the secondary market to Fannie and Freddie. They're not sold to Fannie and Freddie on the secondary market. So the lenders that lend non-QM products take on a higher risk. Therefore, your closing costs, your down payment, and your interest rates are all going to be probably a little bit higher. What kind of properties can you do? It really just depends. Like every lender is different. So if you're in a situation where you are self-employed, or you want to look into one of these products because you haven't been able to get qualified using traditional financing, give me a call. I am happy to do a no obligation consultation with you. I'm happy to be a resource for you, so we can talk and weigh out your options and see if one of these options makes sense for you. Who can use the non-traditional financing? Like I said, the bank statement program, the profit and loss program, those are specifically for the 1099 program, specifically for self-employed or contract workers, business owners. The foreign national program, specifically for foreign nationals. So anybody who's self-employed could use those. The assets as income or asset utilization and the no ratio program can really be used by anybody who has a good enough credit score and a high enough down payment or assets available to cover down payment and closing costs. The bank statement, the light doc must be self-employed. I might touch on this. Really, again, any kind of property can be utilized. That every lender is going to have different qualifications. Some of them might have a maximum acreage amount. If you're wanting to buy land, a house that's on a lot of land, maybe they won't do more than 10 acres, more than 15 acres. Each lender is different, and which is the beauty of being a brokerage. I can shop and figure out which one we're going to be able to make work for you depending on the property that you're trying to buy. Many of these loans can be used to both purchase and refinance primary, secondary, and investment properties. Typically, it's only properties that are 1 to 4 units. If the property is more than 4 units, like 5 units and up, then it's really needs to be more of a commercial loan. But we can do condos, we can do PUDs, we can do both warrantable, non-warrantable condos. We can do vacant land for some of them. It can be a mixed use property. So with me having access to so many different lenders, it just kind of depends on the different lenders' guidelines. So like I said, reach out. Let's talk about it if you want me to look into these programs for you. So anytime you're working with a broker or any loan officer, really, you just want to make sure that you're working with somebody that you feel comfortable with, that you trust, that's going to listen to you and listen to your goals, your needs, understand, and kind of lead you in the right direction. I know in this rising interest rate environment, it gets a little bit scary. I do want to talk a little bit about one of my clients. I had a client that I was trying to qualify for a bank statement loan back in November, December, and had the client qualified for bank statement loan. And that particular client decided, you know what? I'm going to wait. I'm going to file my 2021 taxes. I'm not going to write off as much, and I'm going to see what I can qualify for with a conventional loan. Well, fast forward to now, client has filed taxes, and guess what? The interest rates right now on the conventional loan are what they would have been for that bank statement loan. We could have gotten that client into a house back in November and December at the same interest rates as we have right now. So sometimes waiting for the conventional because of the rates is not going to be the right move for you. Maybe it is, maybe because of your situation. So all of this is stuff that we talk about. And so as your loan officer, I can promise you that I'm going to listen. We're going to help come up with a plan that's going to work for you. And again, I don't want you to get too caught up in the interest rates. Let's get you into that home that is an asset. And again, if you're renting, what's the interest rate on rent? It's 100%. So if you're wasting money on rent, you're better off paying 5, 6, 7% interest rate on something that you own rather than 100% interest on something that you're renting. So anyway, I'd love to be a resource for you. I promise I will help you in no obligation. Just I can check and help you come up with a plan to figure out the right program, the right product for your needs. If you want to reach out, my cell phone number is 210. Let me pop it up on the screen there. My cell phone number is 210-279-4392. You can email me at ericabelay@bestlifemortgage.com, or just shoot me a direct message. If you're watching this on Facebook, you can PM me or just put a comment in the chat. I'm also streaming on LinkedIn and on YouTube, so you can reach out to me any one of those ways. But I'd love to be a resource for you. Best Life Mortgage is a great company. We want our clients to lead their best life, and we want to help you get there. So we're going to just provide you with a first-class experience, empower you to have a growth mindset. And we give 10% of our corporate profits to a company called Destiny Rescue that liberates kids from the shackles of human trafficking. So I feel heart connected to the fact that we are a tithing company that gives back. And so every loan that you do with us helps a child. So give me a call. Good luck out there in this crazy market if you are trying to purchase. And I'd just love to help you get into the home of your dreams. Have a good one.